China and US surprised markets in a positive way. Oil prices dance on Trump's trumpet. Positive sentiment weighed heavily on gold. US rupee closed with a gain. US markets closed with a gain. Dow rose more than 200 points to close above 27,100. S&P 500 closed with a gain above 3,000 and Nasdaq closed with a gain of 85 points. And European markets, FTSE also closed with a gain of 70 points. Asian markets are trading in a green today with Nikkei above 21,700 and Shanghai above 3,000. Rupee and Indian markets also closed with a gain on Wednesday. Good morning everyone, this is Shaurya from Market Times TV and you are watching Journey of Financial World around the world. So let's start with the main events which impacted the markets. China tariff. China is trying to reduce the impact of trade war as it excluded some of the products from the tariff it has placed last year and the tariff of 25%. Bloomberg reported that even though tariffs on some products are reduced but will stay on agricultural and manufacturing products which are produced by the states that have good voter base for the Trump. So this seems to be like a master move by China. At one point they are directly targeting the presidential candidacy of Trump, but on the other hand it is showing that China is up for improvement and is doing it as a goodwill gesture. However, Trump also saw it as a goodwill gesture and delayed the tariffs he is supposed to impose for 2 weeks. And this sent the markets up as two of the biggest powers of the world have shown concrete actions to improve the relations. Trump too eased sanctions on Iran. Donald Trump showed his soft side to the world and gave a positive surprise after he decided that he will reduce the sanctions on Iran. It seems he is considering to ease the sanctions on Iran, so that will make platform with the talks with Iranian President Hassan Rouhani, as was reported by Bloomberg. So it seems that Trump was in jolly mood yesterday and he decided to ease his reign on both China and Iran, which are considered his arch rivals right now. And just in June this month, the relations between US and Iran tensions started escalating very quickly when Iran downed unmanned drone of US, which was followed by more sanctions on Iran by US. Possibility of improvement in US and Iran relations actually began day before yesterday when Donald Trump fired his national security advisor John Bolton. Bolton was considered as Iranian hawk and advocated for military action against Iran. So sacking him actually paved the way for improvement in talks. Hong Kong Exchange. Hong Kong Stock Exchange and Clearing made a bid to purchase London Stock Exchange for $37 billion and it took the markets by surprise as no one expected it. Hong Kong Exchange and Clearing stated that the deal will be around 37 billion and 39 billion and it will be combination of both cash and share. It came at an interesting time when LSE was planning to buy intelligence company Refinitiv Icon and to compete in the dominating financial data world market, which is right now dominated by Bloomberg and Reuters. And it is also reported that this deal was actually there and the bid was made by Hong Kong Stock Exchange to actually disrupt the deal between LSE and Refinitiv Icon. Scotland court has declared that suspending of parliament by Boris Johnson is actually unlawful and that has created more uncertainty regarding the Brexit. Writers added that uncertainty is so high that any action on the spectrum ranging from no deal Brexit to a new referendum on Brexit can happen, and this has created a huge round of volatility around the Brexit. American firms are getting highly impacted by the trade war. According to the poll by American Chamber of Commerce in Shanghai, the profitability of its member companies has fallen while they still remain profitable in 2018. Specifically, the growth in reporting revenue saw a decline. Chamber also stated that companies' optimism has fallen and due to that they can move to somewhere else. It was also reported that 3/4 of member companies actually opposed the tariff to improve the trade. Writers added that the more than quarter of firms in the fold have move their investment away from China towards Southeast Asia and India, adding that IT, technology, hardware, software and services are the region where most prominent for investment redirection. It was also noted that more number of companies are firing people than the last time the survey was conducted. ECB meeting. Markets have already factored in rate cuts, but aggressive rate cuts will provide positive outlook for the market. But that may not happen for long as current deposit rates of ECB are already negative and going further in that pit may harm financial institutions and financial system very much. Basically, if interest rates are negative, then banks have to pay interest rates if they keep money with themselves or with the central bank. In the system, if bank keep money deposited with central banks, then they pay the interest rate. So this negative interest rate basically motivates them and incentivizes them to lend the money. It is also believed that this will actually increase the flow of money in the market, and it will lead to investment and also rise in inflation. Besides this, if rates are low, then less investors will pour money in the country, and that will lead to fall in currency, which in turn will increase the exports. Also, it will make imports more expensive, and that can lead to increase in inflation from very low level, which is being witnessed in the Europe right now. But European banks like Deutsche and UBS have already pointed towards a negative impact on profitability of the bank, as when depositing rates fall. So this might impact the deposits made by retail client, because interest rates are the reward for withdrawing with your money. So if rewards are very less, there is high possibility that retail clients might reduce their deposits, and that can have catastrophic impact on the markets and the financial system around the world. Well, actual impact of all this will need to be observed by the market, but right now sentiment is enough, and sentiment is positive, so stimulus will be taken positively, and it will be how it will be played out by the banks and financial system needs to be seen. Trump actually advocating the negative interest rates also for US, and has asked US Fed Jerome Powell to do it, because according to Trump, it will allow US to refinance its outstanding debt of $22 trillion. But writers have added that this move may not be considered because Fed do not think it's appropriate for US, as inflation rate compared to US and Europe, there is a difference, and US have higher inflation rates. So this might not be a good policy. Also, there hopes that this move can lead to political issues regarding the negative interest rates. But writers said that economies like Europe and Japan, where inflation rates are very low, for that this system might work. Now let's move on to oil. Brent is trading above $61 per barrel, and WTI crude is above $56 per barrel. Oil were trading in positive and stronger than expected draw sent oil prices even higher yesterday when EIA reported decline in inventory of 6.9 million, and that kept the oil price close to 63 barrels. But then Donald Trump once again came on the scene, and this time actually with the good news. When he decided to ease the sanctions on Iran, that saw Brent falling below 61, and WTI crude fell below 66 after it went even above $58 for the day. OPEC monthly report also acted as bearish, as it revised down the forecast for demand of oil. In the report released on Wednesday, OPEC stated that by 2020, the oil demand will increase by only 1.08 million barrels per day, which is 60,000 less than a previous time. Also, the growth for economic growth saw a decline from 3.2% to 3.1% in OPEC's monthly outlook. Report also added that growth in US oil supply will be more than growth in demand, and this might lead to more capture of oil market by the US shale companies. And now OPEC has two options. Either it can go out to regain market share from US, or it may try to balance the oil market. Currently, it seems that OPEC is feeling like they have bigger fish to fry than going after the rivalry, and may focus on maintaining balance in the oil market. Later in the night, when Trump decided to delay the tariff on China, oil prices started rising again. Gold is maintained around $1,500, while silver has maintained its position above $18 an ounce. Gold prices were down on the account of improvement in global sentiment, which made investors move towards more riskier secure assets for profit booking, and correction from higher levels in gold and silver also saw decline. Experts believe that this is actually healthy correction. It was observed that rise in gold led to decline in retail demand. But after correction in prices, there is hope that retail demand will improve on the account, and that more correction is expected, and festive season is also coming. Jewelers have reported that the rapid rise of gold price led to consumers shift from gold jewelry to diamond jewelry and uncut jewelry. Now let's move on to Indian markets. Rupee closed higher yesterday with a gain of 5 paise and closed at 71.66 against dollar. Improvement in global sentiment saw a rise in Indian stock, and that provided strength to the rupee. Rupee traded in the range of 71.66 and 71.84 against dollar. Indian markets will be eyeing on CPI and inflation data, which is due to be released this week. NSE provisional data showed that on 11th September 2019, FIs actually were the net buyers after a long time, and they bought net amount of rupees 266 crore from Indian capital markets, while domestic institutional investors were also net buyers and they infused 1132 crore in Indian markets on 11th September 2019. Indian stock markets also ended with a gain on Wednesday, with biggest gain observed in auto shares after finance minister assured that government will take actions on the demand of auto sector, and cement stocks also witnessed growth. Nifty closed with a gain of 32 points at 11,035, while Sensex closed at 37,270 points with a gain of 125 points. Mid caps and small caps actually saw more gain than the Sensex. That's it for right now. Bureau Report, Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना ना भूलें।